Listen closely. Most people think that taxes are just bills that you have to deal with once a year, but that's not how the system was designed. The tax code is actually a set of rewards, and business owners who understand it play a completely different game than everyone else. And in this video, I'm going to be showing you how ordinary everyday spending, things that you already pay for, can legally reduce your taxes when you structure it the right way. So stick with me, because at the end of this, I am going to be able to share with you how you can be able to turn your losses and actually be able to get some money back. So let's get right into it. All right. So let's first talk about why business owners play a different role when it comes to the tax code. So here's the thing: most people never hear the IRS does not treat everyone the same. So if you are a W-2 employee, your tax breaks are going to be limited. Your paycheck is predictable and your risk is low. And if you're a business owner, on the other hand, the government's going to see you differently. Why is that? Because you, as a business owner, you put your money on the line. And because of that, they want more people to be able to do that, because it's not only going to increase your earning potential, but then it's also going to allow you to be able to do things such as hiring employees, being able to provide products and services. And because you're a business owner, you're dealing with uncertain income, you're paying expenses before they hit your profits, and you are doing a whole bunch of other things that's going to allow the government to be able to do its job. And because the economy needs people to take those risks, the tax code is going to give you, as a business owner, even more flexibility to be able to save and potentially reduce your taxes. All right. So that's where section 162A of the tax code comes into play. All right. It allows business owners to be able to deduct expenses that are considered ordinary. Ordinary meaning that what is going to be considered common in your industry. Necessary meaning that what is going to help you be able to earn extra income. And what is going to be considered reasonable. The IRS basically does not want you to do anything excessive or what they consider abusive. All right. So once you understand those rules, the entire tax system starts to make more sense, and it becomes a lot more easier for you to break it down. So let's talk about some common expenses, some everyday expenses, things that you're already spending money on that you could now turn into a tax write-off. So let's talk about the home office, right? So you don't need a fancy setup, and this is probably one of the most overlooked deductions, right? So if you work from home and have a space that is used consistently for business purposes, and you are able to identify the square footage of that space, then that is going to be able to allow you to be able to qualify for this home office deduction. And no, it doesn't need to look like a this well-designed office space. It does not need to have all the bells and whistles. All right. So examples that often qualify for this is a guest room turned into a workspace. So that could be considered an office space. Maybe a corner of a finished basement. That can be considered an office space as well. And also maybe a detached shed or a studio that you may have and that you may be paying for, or a converted garage space as well, can also qualify for this home office space. All right. Because your office is now going to live inside your home. Now you're going to be able to deduct part of the living expenses that you have as it relates to being a homeowner. Okay. So maybe that is going to be things like your rent based on the use of the office space, your mortgage interest, your electricity, your water, your internet is all going to now be able to qualify for this home office deduction. And that is really one of the benefits, because again, these are things that you're already paying for. And originally, before this, if you weren't a business owner, you weren't able to take it as a tax write-off, but now you can. So that is what is going to be related to this. Okay. So again, you want to just be really thinking about all these different things that you're spending money on: repairs tied to the office, for instance, even home insurance as well. Now, as it relates to this home office deduction, there's going to be two main ways to calculate. All right. So option number one is going to be what we call the simplified method. Okay. And that's basically taking 5 feet per square foot up to 300 square feet. All right. So that's going to give you a maximum deduction of 1,500. The other option is going to be what's called the actual method, also known as the percentage method. And this is going to be you actually measuring the office space and the office size, and you want to divide that by the total size of your home. Okay. And then that is going to go ahead and give you a percentage to be able to calculate the actual cost and the percentage of the actual cost that you're able to deduct. So to give you an example of this, let's say your home is 1,800 square feet. All right. So your home is 1,800 square feet and your office space is 180 square feet. So what is this going to do? So now you go ahead and do the calculation. That is a 10% calculation. 180 divided by 1,800. That is 10%. And that is going to be used to determine what your business use is. All right. So that means that 10% of your eligible home expenses may reduce your taxable income. Okay. Also, let's talk about computers, tablets, tech gear as well, right? Here's what most people overlook as well, right? You don't need to use equipment 100% of the time for a business to be able to deduct it for your business, right? So if you use a computer for your client emails, if you're using your computer for invoicing your clients and being able to send them payments and collect payments, if you're using your computer to be able to market, maybe you're going ahead and running ads, for instance, or creating social media content, if you're using your computer to be able to do research for your business, all of these different things are going to be considered business use. And now that's going to allow you to be able to deduct a portion of your computer, your tablet, the rest of this equipment for business purposes. Why? Because now, instead of it just being for personal use, it's now considered a business tool. Okay. So let's say, for instance, you have a laptop and that laptop costs you $2,500. All right. Well, guess what? Let's say you go ahead and use that laptop 70% for business. So doing the things I mentioned, even doing other things, right? It's really depends on your business and what you have going on, but that's going to be roughly a $1,750 deduction. All right. And this can also apply to things like external monitors as well. So, you can really get detailed with this, as detailed as you need to be, but you want to be looking at all these different things. Okay. This also counts for your keyboards, your laptops. This is going to be your cameras as well, right? Subscriptions on softwares. All these different things now are going to be considered business use. Okay. So the key thing is you want to make sure that you document it, and you want to make sure it's a reasonable usage of documentation that you're going to have, right? So let's say for cell phones, okay? And this applies even if you have multiple ones, right? Here's a common mistake, right? People think that only one phone can be deducted, okay? And that is not true, okay? So if you have a personal phone that you use only for personal purposes, but then you also on the side have a business phone, right? So now you have more than one phone, and that's going to be easier for you to be able to track this and be able to manage this. Then that is going to allow you to be able to deduct 100% of those expenses related to that business phone. Okay. Maybe you might have multiple lines used for different ventures, right? Each one could be partially or fully deductible, really based on the business use. Okay. So just to give you an example of this, so let's say you have a phone that costs you $1,200. Okay. Maybe it's an iPhone, whatever the phone is. And let's say you go ahead and use that for 50% business use. Well, guess what? Now 1,200 times that 50%, that is going to give you a $600 deduction. Okay. How about the monthly service plans, right? Because you can't use the phone if you don't have this monthly service plans. All right. Same rule applies. So you just want to be honest. You want to be consistent. Okay. Next, let's talk about vehicle deductions. Okay. So small amounts add up fast. So vehicles, cars. Okay. So if you drive for business, even if you do a part-time, you may be able to qualify for what is considered a vehicle deduction. Okay. So this is going to include things like visiting your clients. This is going to be things like site inspections. If you're doing real estate, for instance, maybe you're going to a conference, maybe you're going to a seminar, maybe you're doing supplies runs and you're going ahead and maybe going to Office Depot, a Staples, Office Depot, Staples, Home Depot. All these different places are going to allow you to be able to do that. Maybe you're doing some business errands as well. So all these things are going to be considered business miles for you. So you want to make sure that you take advantage of the two ways to be able to record and track this and deduct this. The first method is going to be the standard mileage method. This is going to allow you to be able to track your business miles. So you want to multiply it by the IRS rate for that current year, and that is going to be applied. So As it relates to 2025, for instance, 70 cents per business mile is going to be what you are able to go ahead and deduct. Okay. So to give you an example of this, let's say you drive 3,000 miles for business purposes. Okay. Really key to go ahead and make sure it's related to your business. Then that means you're going to get a deduction of 2,100. Okay. Again, this is something that you may be already doing, and a lot of people end up missing out on this, and they are not able to take advantage of this deduction. Okay, so it's simple and it's really easy to do. All right, the actual method is going to be another method that you could be able to do this, but it's going to require you to put in a little bit more work, but it's going to be worth it. Okay, so let's say you actually record and track your actual expenses. So that's going to be things like your gas. That is going to be things like your insurance. That is going to be things like your maintenance as well. Okay, so these things are going to be utilized to be able to track your actual expenses as relates to your vehicles. Okay, this is also going to apply to things like your repairs, your registration, right? All these different things that is going to be required in order for you to be able to maintain this vehicle. That is going to be important to be able to do this. So you want to go ahead and apply the business use percentage. So let's say, for instance, your total vehicle expenses, when you add all these different expenses up, is 12,000. Let's say you go ahead and use that vehicle for 40% business use. Well, guess what? Now you are able to go ahead and get a $4,800 deduction just by being able to use this actual method and being able to go ahead and take advantage of this. All right. So really, depending on your situation, one method will usually beat the other. So you just want to go ahead and run the numbers and see what makes the most sense. Okay. Also, you have meals. That's going to be another way to be able to do this. And this is another deduction that a lot of people get confused. And the reality of it is you can't deduct every meal. Okay. But many business meals do qualify, right? And most of them are going to be deductible by 50%. All right. When business is discussed and the meal isn't lavish. Okay, so you want to make sure that the meal is reasonable and you are actually discussing business, and that is going to allow you to be able to take advantage of this business meal. And it has to show, and you have to demonstrate that there is a clear purpose to be able to do this. Okay, so let's say, for instance, you go ahead and have a lunch with a client. Okay, and now you all are discussing business and there's actual business purpose of it. So that is going to be a business meal. Maybe you're having dinner while you're traveling for work. Maybe you're having a coffee meeting with a partner. Okay. Again, all these things are going to be considered business use and for business purposes. So what you want to do is you want to make sure that you're tracking these. You want to track some very important details. These are things that the IRS is going to want to see in the event if they happen to go ahead and audit you. Okay, so they're going to want to know the date. They're also going to want to know the place. They're going to want to understand the people that were there. They're going to want to understand the amount that was spent. And the great thing about this is this does include taxes and tips as well. And that is going to be important for you to be able to record. So hopefully this is helpful for you. If you enjoyed this, make sure you go ahead and stick around. I have a lot more content to share with you. See you in the next video. Take care.